You know, for decades, the US dollar has been, well, the undisputed king of global finance. It's been the bedrock. But things are starting to change. You can almost see these little cracks appearing in its armor, and a whole new story is beginning to unfold. So, what's actually driving this whole shift? Well, it kind of boils down to one single, really powerful number: 56%. Now, what does that even mean? 56%, that's the US dollar's slice of the world's entire foreign exchange reserves. And get this, it's the lowest it's been in 2 decades. And look, this isn't some random blip on the radar. It's not a one-off bad quarter. No, this is a steady, consistent decline that's been happening for years now. So it raises this huge question, the one everyone's asking. Is the dollar's long reign finally coming to an end? Okay, so this slide kicks off our next section because, this whole decline, it's not happening in a vacuum, right? There are forces at play. It's actually being pushed along by this global movement of countries that are actively looking for alternatives. And leading the charge, you've got this group of major emerging economies. You've probably heard of them, the BRICS nations. So what are they up to? Well, the BRICS nations, that's Brazil, Russia, India, China, and South Africa, they're actually teaming up to create their own new shared digital currency. The goal here is pretty blunt. They want to build a whole new system for international trade that completely bypasses the US dollar. And they're not messing around. They're backing it with blockchain and central bank digital currencies, which sends a really clear signal that, hey, this is a serious, future-focused project. Now, what's really interesting is that this BRICS plan is just one symptom of a much, much bigger trend. It's all part of this global shift that people are calling de-dollarization. It's exactly what it sounds like. Countries are actively trying to depend less on the dollar. So let's dig into the evidence for that. And this chart, wow, it just lays it out so clearly, doesn't it? The decline over the last decade is just undeniable. I mean, look at this. In 2015, the dollar's share of global reserves was sitting pretty at 66%. Fast forward to 2025, and it's expected to be under 57%. So again, this isn't some sudden dramatic crash. It's more like a slow, consistent erosion. Which begs the question, what's really causing this? All right, so there are really 3 key drivers pushing this whole thing forward. First up, you've got financial sanctions. Think about it. When the US freezes a country's assets like they did with Russia's, it sends a chill through the rest of the world. It basically says, hey, those dollars you're holding, they might not be 100% safe. Second, there's what some people call the inflation tax. When the US has high inflation, it chews away at the value of dollar reserves that other countries are holding. Their purchasing power just shrinks. And finally, it's pretty simple. When the dollar is weaker, other things, like gold or the euro, just start to look a whole lot more attractive. And just so we're clear, this is not some abstract, theoretical economic trend we're talking about. Look at these numbers. This is the real-world impact. I mean, in just 10 years, Russia went from 22% down to 0. They completely dumped their dollar holdings. And it's not just them. You see major economies like China, India, and even a country like Spain making huge reductions. These are massive, deliberate policy decisions, and they have very real consequences for the entire global financial system. So if they're selling dollars, what are they buying? Where's all that money going? Well, this scatter plot reveals a really clear pattern. As countries are ditching their US dollar reserves, they're often piling into gold. It's a classic flight to safety, right? They're moving into a tangible asset that isn't controlled by the policies of any single country. Okay, let's just pause for a second. The case against the dollar seems pretty strong, right? You've got declining reserves, the BRICS countries making a move, a general desire for alternatives. But, and this is a huge but, here's the paradox. Despite all of that, the US dollar is still the undisputed king of global finance. So why? How is that possible? Yeah, that's the big question we need to tackle now. If the dollar has all these weaknesses, why on earth does the world still run on it? To really get the full picture, we have to look at the other side of the coin, the powerful forces that are still propping up the dollar's dominance. Let's jump in. All right, the first piece of the puzzle is something called the petrodollar system. You can think of it as the deep, hidden plumbing of the entire global energy market. See, ever since the 1970s, pretty much all international oil sales have been priced and paid for in US dollars. This creates this constant, massive built-in demand for the currency because literally every country needs dollars to buy oil. And this donut chart, it just perfectly illustrates how the world actually does business on a day-to-day basis.
Yeah, the reserves are shifting, but when it comes to actual global trade, the dollar is still the boss. Over 60% of all international transactions are still done in dollars. The euro is a distant second. This role as the world's go-to currency for business is an incredibly powerful anchor. And this quote from Brendan Fagan at Bloomberg really connects the dots perfectly. He says, when crude spikes, it is effectively a direct demand shock for the currency. What he means is, every single time oil prices go up, it actually increases the demand for dollars. It's this wild paradox where a global energy crisis can end up making the dollar even stronger, reinforcing its place at the center of everything. But it's not just about trade. The dollar has another, almost mythical superpower. It's the world's ultimate safe haven. What does that mean? It means when things get scary out there, we're talking wars, market panics, any kind of major crisis, investors overwhelmingly run to the safety of US dollar assets. It's like the world's financial emergency exit. When the alarm bells are ringing, everyone rushes for the dollar. So here we are at our final section, trying to make sense of this all. Because we're left with these two powerful competing stories, right? On one side, you have all this evidence that the dollar's dominance is chipping away. But on the other, its core functions seem as strong as ever. So how do we reconcile these two opposing truths? Let's try and figure out what the future might actually hold. So this really lays it all out, side by side. It's a tale of two totally different trends happening at the exact same time. In the decline column, you've got the falling share of reserves, countries actively diversifying away, the sting of sanctions and inflation, and the rise of real alternatives like the BRICS currency. But in the dominance column, you've got its massive role in trade, its untouchable status as a safe haven, the whole petrodollar system, and the simple fact that there's no single viable replacement ready to take its place. So what's the verdict here? I think the key takeaway is this. We're not looking at a sudden collapse of the dollar. That's just not what the evidence suggests. What we are seeing is a slow, gradual erosion of its total dominance. The future probably looks less like a new king being crowned and more like a multipolar currency world. A world where the dollar is still the most important player on the stage, but it's not the only one. It'll have to share the spotlight with the euro, the yuan, and maybe even some of these new digital currencies. So, to wrap it all up, the dollar's empire isn't collapsing, but the very ground is shifting under its feet. That unipolar world we've known for the last 50 years, it's slowly giving way to something new, something more multipolar. And that leaves us with the real question. It's not if the dollar will survive. It probably will, in some form. The real question is, what does this new world order actually look like? Is it going to be more stable, more balanced, or more fragmented and chaotic? Honestly, only time will tell.